Hey everyone, welcome back. Today we're going to be breaking down one of the biggest forces shaping the housing market right now, something called the locked-in effect. And here's the deal. More than 81% of US homeowners with mortgages have a rate below 6%. Let that sit in. 81%. That is such an incredible number when you think about it. That means most people are sitting on loans they locked in during the pandemic years, those rare windows when rates dipped to record low rates. And now, well, they're not selling. They're not refinancing, and it's keeping the entire market stuck in neutral. So why should you care? Because whether you're a first-time buyer trying to get your foot in the door, a seller wondering if now's the time to list, or even a homeowner who is thinking about upgrading, the locked-in effect is shaping everything from inventory to home prices to your monthly payment options. So stick around, because by the end of this video, you're going to understand exactly why this matters, what the experts are saying, and where the market could be heading next. So let's start with a real-world example I came across in a recent Realtor.com report. Now, during the pandemic, one couple living in Massachusetts decided that they were done working 12-hour days just to cover their housing costs. So they ended up selling their home well above asking and relocated to a small town in Mississippi where, to no surprise, their money went a lot further. Now, for the price of a modest Massachusetts home, they were able to buy a much larger property with land and even a guest house. The catch? Well, the place, it needed some serious renovations. So they took out a new mortgage around 5% to make the home livable. And now, well, they'd like to build an addition and maybe even buy a vacation property. But they hit the pause, they hit the brakes. Why is that? Well, because today's higher mortgage rates, well, makes that next step financially really unattractive. And that's the lock-in effect in action. Even when people want to buy, upgrade, or expand, the low rate mortgages from a few years ago make it hard to justify borrowing again today. So what is the lock-in effect? Well, it's simple, friends. If you already have a mortgage at 2%, 3%, 4%, or even 5%, why on earth would you sell your home and take on new mortgage at 6.5% or even higher? Most people won't, and that means inventory, the number of homes for sale, stays low. And here's some numbers to break that down and let that sit in for a bit there. 20.7% of mortgages are below 3%. 32.7% are below 3 and 4%. 17.9% are between 4 and 5%. Then you have 9.9% between 5 and 6%, and only 18.8% are actually above 6% or higher. So basically, when you look at these numbers and factor everything in, that's 3/4 of all mortgage holders are sitting pretty at 5% or less. That's why sellers aren't budging, and buyers, well, they're left with fewer options, which keeps prices stubbornly low. Now, economists are watching this very closely. Now, Hannah Jones, a senior analyst with Realtor.com, points out that while house supply has improved slightly, it's still well below pre-pandemic levels. Now, that shortage is fueling competition, especially for affordable homes. Now, another economist, Jake Krimmel, explains that this total number of mortgages nationwide has actually declined for the first time since 2018. Again, why is that? Because demand is down and people own their homes outright. Now, looking ahead, experts expect that by the end of 2025, shares of mortgages below 6% will drop from 81% down to 75%. Why again? Well, because new buyers today don't have a choice. They're forced to buy at 6% or higher. So slowly, the market mix is shifting. So what could get things moving again? Well, it comes down, not to make a Captain Obvious statement, to one thing: mortgage rates. Now, a recent survey, which I found this to be pretty interesting, found that 40% of buyers out there would jump in if rates drop below 6%. Now, another third of buyers would jump in if rates drop below 5%. Right now, 30-year fixed rates sit around 6.58%. That is a 10-month low. That's progress, but not enough to unlock the market. If inflation continues easing and the Fed starts cutting rates, which markets are betting on soon, actually next month, mid-September, we could see more sellers lists and more buyers finally getting some relief. Now, with existing homeowners locked in, guess who's filling the gap? This was interesting. Builders. In fact, new construction has surged, especially in the South. Builders are getting smart. They're offering smaller, more affordable homes that match today's buyer's budget. And here's something surprising as well. In the second quarter of 2025, new construction homes were actually cheaper per square foot than existing homes. Yeah, it's almost unheard of. The premium for new homes compared to resale homes dropped to just 7.8%. Friends, that is the lowest in history. So if you're house hunting right now, don't ignore new builds. They might actually be the better deal right now. So here is the bottom line as we start winding down here. Most homeowners, they're locked in at great rates. That's keeping inventory tight and prices elevated. The market won't loosen up until rates drop likely into the 5% range. In the meantime, new construction is stepping in a big way to provide some options. So if you're buying, look, patience or creativity is key. And if you're selling, your lower mortgage rate is the golden handcuff, the golden ticket that buyers today could only dream about. And what do you think? Would you sell if you had a 3% mortgage, or would you stay put and ride it out? Drop your thoughts in the comments down below. I would love to hear from you. And actually, if you're here in Orange County, California, and you're thinking about buying or selling, feel free to reach out. I'd be happy to help. But friends, that's going to be it for this video. Don't forget to hit the like button, subscribe, and share this video if you found this helpful. With that said, I will see you in the next video.